Yeah, so there's been this movement, it seems like, to basically, use Bitcoin-backed loans in all of these different avenues, right? How do you think that's just changing businesses in general? How does that all change everything?
Yeah, absolutely. And that's a great question because this is not the first iteration of Bitcoin lending, right? So in the previous cycle, we had the fiat iteration of Bitcoin lending. We had Bitcoin lending with rehypothecation schemes going on in the background. And what we learned is when you rehypothecate Bitcoin, because you can't print more of it, because you can't expand the supply just because something's too big to fail, it actually fails. So we get the healthy part of the credit destruction cycle. So in TradFi, we don't get the destructive part of the credit cycle. So what do we end up with? Zombie companies that can barely service their debt and a too big to fail system where if there's ever a mistake made, nobody ever has to pay the penalty. And what do? We just print over it. Well, you can print fiat dollars and cash equivalents all day, but you can't print Bitcoin. So when these rehypothecation schemes went wrong in Bitcoin, everything collapsed. And unfortunately, those people who were harmed, especially in the FTX scenario, this is what's going to happen with rehypothecation schemes, even moving into the future. I think for Bitcoiners, liquidation risk is the largest risk as we move into financialization because the big players, they'll use their printed fiat debt as a way to accumulate your Bitcoin. So we have to be careful of that. We have to be cognizant of the fact that big players want to accumulate Bitcoin. And one of the best ways for them to accumulate Bitcoin is to issue debt and get that Bitcoin at liquidation prices. And then if something goes wrong and in the fine print of that centralized entity, there is some type of rehypothecation scheme going on, when they print the money, they can only print dollars. So they're going to settle with you in dollars. So this is why at People's Reserve, we say choose your counterparty wisely. This is V2 for financialization of Bitcoin. And we do a couple things different at People's Reserve. Obviously, we don't rehypothecate, but we just don't say that. In the fine print of our contracts, which everybody will be able to read later this summer, we actually contractually obligate ourselves to not rehypothecate collateral. So if we were to rehypothecate the collateral, we would actually be in breach of contract. That is a new standard in the industry. At People's Reserve, we've taken a different approach and our cost of capital is zero. We ourselves act as an LP and we've sourced other LPs who believe that lending to an entity with a printer is actually more risky than lending to an entity that is secured by Bitcoin and real estate. And something else that pushes us into V2 of financialization of Bitcoin at People's Reserve is we don't treat it like a risk on tech stock that you borrow in margin. So when it comes to our Bitcoin powered mortgage product, you're not just posting Bitcoin collateral on margin and then borrowing with like a 50 to 70% LTV. To initiate the purchase of the home, you only need to post 1-to-1. So if you want to buy $1 million home, you post $1 million of Bitcoin. Well, how do we do that? Well, because number one, it's a cross collateralization contract. For the lender, it's not just the Bitcoin that secures the loan, it's also the title to the real estate that secures the loan. So we can reduce that threshold. And how we mitigate that liquidation risk is number one, adjustable interest rates. So if you post 1-to-1, $1 million, you buy the $1 million home, and then the price of Bitcoin goes down, people are like, well, wait a second, won't I immediately get liquidated? No, because in our contracts, and this is part of the real innovation, like it's a contract, right? Everything's a contract in the world of business, whether it's a smart contract or a centralized written and signed contract where you look in the eyes and shake a hand, everything's a contract. And our innovation is within our contract. And what we do is as the price of Bitcoin goes down, every 10% the price of Bitcoin goes down, 50 basis points gets added to your interest rate. So if we have a COVID type crisis and Bitcoin is at $10,000 and the price comes down to $5,000. In other platforms, the industry standard, you would be getting margin calls. And then as the price went below $3,500, you would be getting liquidated. So what's the difference between that scenario and the same scenario at People's Reserve? Well, you post that $1 million at 10,000. We have this COVID type liquidity crisis. The price comes down 50%. Your interest rate goes up 50 basis points for every 10%. So 2.5% overall. So let's say you're borrowing at 6.5%, then your interest rate can go up to 9%. But as Bitcoin recovers and a month later, right? A month later after COVID, could you imagine you're borrowing it? It goes down to 3,500. You're liquidated. A month later, it's back up at 10 grand. You're like, oh my, I don't even have my Bitcoin anymore. This is the worst case scenario. Well, at People's Reserve, you would still have your Bitcoin. The only difference is for a month or two, you would have made a little bit higher of a monthly mortgage payment. But as Bitcoin went back up in price, because it works to the upside too, every 10% increase in Bitcoin, you get 20 basis points docked off of your interest rate. So that 50% gain in Bitcoin price actually equates to minus 1% from your borrow rate. But the really exciting thing is as you move into the future, remember, Bitcoin is engineered money. It's strategically designed to be savings technology. So as it appreciates in value over time, it's going to strengthen your loan to value ratio. And for every 10% Bitcoin appreciates against your loan value, you're going to get a lower interest rate. So it could be that year after year, or even month after month, or quarter after quarter, however Bitcoin performs, your mortgage payment actually goes down. And that's why People's Reserve is here, to empower responsible savers of Bitcoin. We want to make sure you sleep well at night with no liquidation risk, that the burden of the collateral that is provided is at a 1-to-1 ratio instead of 50 to 70% of the value. And then, of course, with price volatility, removing liquidation risk, and then empowering you in the long run to make sure that as Bitcoin's growth outpaces the growth of your debt, the burden of that debt for you and your balance sheet shrinks over time. So I couldn't be more excited because we had V1 of financialization. It failed miserably because it was very fiat minded. But the transition into V2 isn't just about innovation. It's about the Bitcoin mindset. And they always say, you can't change Bitcoin, Bitcoin changes you. Well, business can't change Bitcoin, and Bitcoin changes business. And we're happy to be the first iteration and the first market mover to embrace this philosophy.